from scalping stuff because that's what everyone wants to do in the first place, right? Everybody wants to make the low time frame, quick money. And well, before I go into anything, just my own feelings about scalping is very simple. If you are not profitable on the 1 hour to 4 hour time frame, I think you should not be scalping because scalping is essentially the 1 hour to 4 hour on a very low time frame, and you have to do a lot of uh, quick planning, quick marketing, market smashing, and out of positions. Uh, a lot of people we don't have all the advanced tools that we're in production that we're building yet. So for most people who are trading on the low time frames and scalping, it is a very different ball game. And it's a very unfair ball game because the market makers, the whales, the guys who have access to higher level data and information from exchanges, they have all the cards. They're able to see everything. So all we're trying to do when we're scalping is to essentially see what they're doing, see what the big guys are doing, and take high probability trades and reversals. So going into, I'll shelve that for a second. We'll go into a market update, a look at the overall market in general. Bitcoin, pretty much as expected from the session we did on Tuesday. We had the move up, breaking into structure testing stop, which was fun. We had the failure. The first initial failure was essentially what we got going into what was it, Wednesday in the evening. Big failures underneath the June. We had new lows created that lost structure levels to the left of us, and then eventually just capitulated back down to the daily weekly open. And we talked about this. It was all expected. We knew it was going to happen. Doesn't mean the move is done. I'm still expecting if you do have a grind up, there's a nice level around 29K, or excuse me, 26.9K up into this zone, 26,930 exactly. So there's a couple interesting levels up there. If we have a move back up, it doesn't look strong enough currently to hold the level, but we'll see. Until we get a failure of the weekly open to go lower, that's still the expectation. Looking at some of the liquidation stuff as well, like we said, we bounced essentially right on the liquidation pocket. It's still in place at 26. What was it? 26,350 down to 26,250. That's the first one. That's the high leverage 100x longs that are there. So if we do get that, see if there's a quick reversal, higher low, lower time frame. That'd be the first potential reversal. The second one, and much more likely, is that we go down to about 26K to 26.1. There's a lot more structure left down here to test, and even just looking on this, if I turn off the SRs real quick, a drive down into something deeper would also get the retail stablecoin demand extremely high, getting us back down to levels that we saw from the 11th, and as well as the oscillator, which is still in the down direction. Trend is technically still down from the failure up at the highs. If you look at when exactly that blue dot popped, I mean, it popped at the first initial failure, and then the confirmation of the failure was done and moving to the downside. So all working according to plan locally, and then higher time frame as well. Just looking at the overall structure, yes, we still have the bullish divergence in place. It's still playing out across the board. The levels that we must hold are things down here from like 25.8 to 25.9. Any loss of 25.8, 25.9, we're going back to 25. There's not really a lot else we need to do. So the priority still remains the upside because we've broken structure and gone up. Yes, we made higher, like lower lows here in this structure. If you look at what we're doing here, it looks kind of Wyckofian, like accumulation to some degree, but that's thrown out the window the moment we lose 25.9. So if you did get the longs, which I hope everybody did, nice failures up into the zone 27.2. We talked about the level 27.2 for a very, very long time what was it, on Tuesday? Why? Because it was the main level we wanted to see failures in. So first test, second test, bang, you're done. So that's all good. It's looking strong. The weekly open still is a good daily demand zone created, right? Daily bullish engulfing candle on the weekly open. That means currently in that zone, you're still looking at pretty high demand, which is still playing out across the board. So any loss of the weekly open, all bets are off to come back down to the structure. Or if you get a failure that comes back down and then back above the level, that's our classic under over. Two things we talk about a lot, or we have talked about a lot, and I'll start mentioning them a lot more, is over unders and under overs. Essentially, you make a new low, but you then regain the important level that you lost that led you to that low. So That would be the first potential loss, 26.5 down to take some liquidity, which tests some structure, but even deeper than that, any regain, like loss and regain of the weekly, looks good for potential continuation until proven otherwise. And like I said, any failures down here, 25.9, 25.8, that's kind of like the cutoff to not looking good until those levels are potentially regained. So, little lower time frame, nothing too crazy, super low volume, trash volume, nothing fun. Getting some failures from local swing structure and movements back to the downside. Let's see if we can hold some stuff here. If we do, that's fine and dandy, but not expecting a whole lot with the current market conditions. Looking at Ethereum, turn these suckers off. So local structure on ETH is much more shitty than if you look at Bitcoin. In general, we had a bearish divergence on the 4-hour, which is beautiful. Very simple if you're using the oscillator. Just tick on regular divergences. 4-hour and higher divergences play out at a very high probability rate. We're talking like over 80 across the board where you have probabilities. So essentially, that's the level that as long as you don't close anything significant above those levels to gain. You had a bit of a fake out here, but then it was instantly lost and retested bearishly on Wednesday to go much lower. ETH is at the point where if it goes any lower than it currently has, like loses the daily open again, loses November, there's nothing left to do but to come back to 1540 to 1550. That's a potential zone to hold. A higher time frame as well. If you look at liquidations, there's big pockets above, very big that haven't been tested, whereas Bitcoin has already done of the structure from the 31st of August. ETH has not. All of the main short liquidations are still in place. ETH is overdue for a significant bounce, as are a lot of alts, which haven't really had a lot of upside traction. It's been moving back down. It's doing a higher low currently, so it looks like it might want to continue, but it's nothing confirmed yet. I'd be much happier with a gain above the March level at 1606 to then start targeting stuff higher for potential retests. But until then, generally the trend's down a little bit lower time frame. So, low time frame it is on Bitcoin as well. We've lost levels and gone lower, but not a significant loss of overall of the structure. There is also, you got to remember, same thing as Bitcoin, since what is it, the flush out we had back at the end of August. We're now getting into the end of September, so we've got a month's worth of very low liquidity, like 10x, 20x, and below. That's starting to build up below us. If we do have failures to gain and get back above creating new highs from what we did at the very end of August, which is what we did on Bitcoin as well, there's a good probability that we're not going to gain it back if we just start failing. And we have to get above the structure here at 17. If we don't get above the structure at 17, it's largely wrecked to go lower, simply because people are starting to switch bias back long again with not a whole lot of upside movement. So ETH, let's look at some TradFi stuff real quick. Give us general market conditions. Yeah, so S&P is clearly failing. We did the big fails Thursday late at night, failing the lows what we did back on the June, creating new lows overall. Only thing that would get me bullish right now, since we are failing to go lower, is if we do one of these, like big boy regain of level, something gaining back for 435 of 4.351, something like that. That's a significant gain back, and that's a pretty high probability target and target something much higher across the board. So priority remains to the downside. Yes, we're getting oversold. Yeah, on chain doesn't matter, but again, we're starting to see some trend change here. If we get the close above, it's not locked in. So if we get the close above, that's cool. I love to see, even the local regain of the floors from the 18th of August. That's an important one. For me, it's about gaining the whole structure to go back higher. Unless we can do that, I'm not super bullish overall across the board. NASDAQ as well, looking at a couple different levels. Let me see if I got my levels. I do. Actually holding significantly better than the S&P. So conversely, where the NASDAQ lost its lows from the end of June, the S&P did not. The NASDAQ's actually holding the higher low in the overall structure. So you want this to be the low. We don't want to see failures under the current structure. This needs a priority move change back to the upside. Until we start getting regains of 14.9, the priority remains down. And lower time frame as well. You are actually seeing a good spot. If you're going to look for high probability reversals, they need to happen here on lower time frames. But we're not there yet. We're just getting some lower time frame potential trend change. We need to hold the lows. If we don't hold the lows, all bets are off. Any failure of 14.701 I call it 14,690 with the daily open. Any loss of that, you have nothing left to do but to test like 14.6 down to 14,550. So generally, market's been having a pretty rough one. TradFi especially has been getting rough. We talked about the highs going back into the mid of July. That's not doing any better at all. Massive swing failure to go lower. Continuing a higher time frame swing fail until proven otherwise. As long as we hold the low, there's a potential chance for a reversal. And the same thing with the S&P. You need to gain back something significant to come back up to test levels you lost that led to the current lows. So I'd like to see a low time frame or reversal, but the dollar currency index is moving against us. The big thing with the dollar currency index, if I just put some levels on, turn these off real quick. Higher time frame, the big thing to consider, especially if I look at the daily, where are we? We're higher time frame at the high of the current range that we built back from March, back from December, back from January. So we're at the range high. It's a very clear range. If this low here is the deviation, this is the high of the range. So turning all these things back off, what can we do with that? Oh, no, we don't want to see that. There we go. Let's change this to a range. Bob's your uncle, and there you go. All right. So you're at the high of the range, treat it as such. There's not really a whole lot to do. Somewhere there. So yeah, you're at the high of the range. If that's the deviation of the downside that regained to go back to the upside, this is essentially where you want to see the failure. Typical range structure, very, very overbought, a higher time frame as well. Weekly has room to run. Weekly can stay overbought. Same thing with indices, same thing with the dollar currency index. They can stay overbought or oversold high time frame until forever. You would need to wait for a break. This needs to be the high point. If we have any new highs that essentially gain to go higher, we're probably looking at something like this with a little consolidation move that goes back up to test like 109. That would be bad for the markets generally, right? So if we're gonna have any type of rally, we need to see some loss of level. I'm looking at 104.58. Just call it 104.6 for simplicity. That kind of loss essentially fails the high and kind of argues the move down. I want this to be the high. It looks like it should be the high. We'll see if we get the reversal. If this thing starts reversing pretty hard, we could see some upside drive in the market, and it's very possible we can get that, but we need confirmation of it. That's the big thing. Higher time frame, some of the indices, some of the TradFi stuff looks like it's broken structure to the downside. Some things have, some things have not. Overall, this is like my priority to watch right now. If we have the gains to go higher, markets equal wrecked until proven otherwise. They have been getting punished. Just look at any crypto, any TradFi stuff from the 17th of July. This 14th or 17th of July, this was the low, or excuse me, this was the high on any TradFi. If you're looking for any kind of confluence to make it make sense in your brain, just invert the chart and look at the times, right? High point in the markets. So this hasn't been fully realized yet either. We've had a very significant upside drive in the dollar currency index with not a lot of significant punishment going on overall in the markets, which is pretty crazy. The longer we stay up here, the more likely it is they'll be realized. So I want the reversal very badly. That's overall, not really a whole lot else going on. Volatility index also having a nice move, a little bit of a move down, but for the guys, I don't know if it's probably a big ask for the guys who are trading the VIX, but still breaking out of the long zone, which is fine if you got the capital to play around in this area. So yeah, if this is the reversal higher time frame on the volatility index, we should be seeing a significant play out going higher. Generally speaking, VIX go up usually means that the markets are dumping. So and vice versa, if they're going down and grinding down, it usually means upside movements, and that's essentially what we've been having since October of last year for TradFi. A little bit of a flush out, but yeah. Overall, that's the market. Nothing too crazy, as expected with Powell speaking on the what was it? Yeah, interest rate decision as such that Max streamed. I was driving, so I actually didn't see it, but a little bit of volatility, nothing too crazy. Generally, markets are a bit dead. Best times to trade are still Tuesday through Thursday, from probably the afternoon of the London session to the morning of the US session as far as volatility. Dead zones for people who are trading low volatility reversals and scalping. Yeah, but just be careful when you're not in the higher volatility areas because you can get wicked out really hard. So I think that's a good segue into the scalping session. We'll go through a couple of confluence points. Generally, what I look at with scalping, and then kind of building onto the swing stuff that we did last Friday, is applying those things from a high time frame to a low time frame, because I think that stuff is really cool to do, and there's a lot you can do with it essentially. So my general setup when I look at scalping, I'll always do the same thing. Whenever I'm gearing up for a scalping session, I want to look at the 4 hour. I want to look at higher time frame to make sure things are essentially lining up to give me a good a good a good zone that I can trade. Right. These are not like extreme conditions on the 4 hour are usually not great things for scalping unless you're looking lower time frame to catch the bigger moves. So if you're on the 4 hour and you see these major points like we saw on the 30th of August or from the 11th of September, like obviously we have very, very high points and low points in the local market. Not ideal for scalping because you're looking to extract maximum value from both directions. So you're looking for a little bit more middling stuff, kind of like where we are now, especially since there's some local structure that's interesting. So with scalping also, I highly recommend that if you're whatever you're trading on, that you're looking at that specific ticker because there's going to be some discrepancies between different markets. So if you're trading on BitGet, use BitGet. If you're using on MEXC, trade on use MEXC charts, Bybit charts. I'm still mostly on Bybit because I was stupid did KYC. Yep, that still was a valid idea. A higher time frame. If we have the loss the weekly to go lower, it's pretty much locally moved to the upside done. So that's still the mentality, still in play. Anywho, so higher time frame. What are we doing? We're running flat. We're seeing some local stuff. We're a little bit oversold. Nothing too crazy. We're at support, so it should be a little bit sideways consolidation. So let's go a little bit lower time frame and see what we can do with it. I'll go down. Yeah, I'm on the perp. That's fine. So go down to the 1 hour. Anything crazy? Anything sticking out? Kind of middling overall. Which is kind of good. If you are looking to scalp levels where you have divergences or where you have levels of extreme extremely low retail stablecoin demand, right? These are good levels to go low time frame to look for bigger shorts, right? So plan your trade on the higher time frame and then go lower time frame to take the position. But if you're doing it just a plain old scalp, you're naked in a position and you don't have anything, that's something we can work with. So when I'm scalping, for me, what I usually do is I'll look at the 15-minute just to give me a general direction. When I think of it this way is I'm building an idea from higher time frame to low time frame. Okay, 4 hours middling, 1 hour's middling, 15-minute, we're swinging back to the upside, oscillating back up. We're back above the daily open. Let's see if we can gain some stuff back at the daily open. Okay. Now, here's some argument that I've heard some people like, what about the 1 minute? Okay, I don't like trading the 1 minute. I think the 1 minute such a low time frame that it's very difficult to get good positions. Same thing on the 5 minute. I think there's a lot of stuff that you miss. A lot of things that where, if that's the potential low, you'll get one little drive back down to go the final low, right? Before you get the reversal point. Personally, I'm partial to the 3 minute. It's always worked out for me. It allows me to see, the 1 minute candles. I can see the closes of those candles as well. Because I can use my brain and see, okay, we're 1 minute in 1 minute 20 seconds into this 3 minute candle. Then I can also see, some things that are happening here, right? The divergences are still great to use low time frame on the oscillator, especially retail stablecoin demand. So general setting wise, what I use just standard setting Harmony Oscillator, and I've ticked on the regular divergences. And then I have the on-chain metric bundle, and I have retail stablecoin demand on. This is showing real-time retail stablecoin demand, and I invert the chart. The reason I invert the chart is because I want to see things that move together. When it's green, that's telling me that there's higher retail stablecoin demand. When it's red, that means there's lower retail stablecoin demand. So what that tells you is retail traders are more heavily allocated into cryptocurrencies, and there's a low demand for stablecoins currency. So think of it as the money flow going from, stable coins into crypto, right? So that's the high point. That's the red zone essentially. Now in the green zones where we have very high stablecoin demand, that means cryptocurrencies people are selling them into stablecoin, into fiat, basically into liquidity to exit the market to take profit to realize profit. So that gives you a good general idea of what that indicator does and why we use it so much with everything else. So what I do, just to simplify things, I know that's what that's saying. I know what the oscillator is saying. So what I will do is I'll actually merge them. That's how I usually have my charts set. I'll move to existing pane above. Now I have my oscillator and my on-chain metric bundle all in the same chart, all showing me the same thing. And now I've got 3 points of confluence, essentially, right? Three different or two indicators, and I'm at retail stablecoin demand, strength, and trend, since I'm trading primarily crypto. Now, if you don't want the thing on the right, you can merge everything into scales. It'll change a little bit where the placement of the on-chain metric bundle is, the retail stablecoin demand. But generally, you're looking for that flow of all three things moving together or not. So that's how I have my setup generally, just when I'm scalping, even on low time frames, just so I can see things. Also, I know that the thicker line is strength, or trend, excuse me, and the thinner line is strength. So what I can do is, if I go to style, I can turn off the labels, which will just make it a little bit more attractive, make it appear a little bit nicer to me. And still, I'm using those kind of three bands as kind of like multiple points of confluence. So to understand that, the oscillator, we've got all the different things, moving averages, shaft trend, MACD, strength, commodity, all these different things moving together, telling me a lot of information in one band, essentially. And the same thing with retail stablecoin demand. So with that, I always have auto charting tools on. That's because it's the only thing that really matters to me a lot of times with some of these higher time frame levels. With this too, you can have the swing points. I have them usually set on the bodies because I'm at the 1 hour to 4 hour. You can set them to wicks on low time frames if you want. I tend to like it a little bit more when I have it set on wicks on the very low time frames because you get some pretty cool lines. Essentially, right? You get stuff like that, which shows you some nice points that are potentially reversal points. Actually, I'll make these bright so everyone can see them clearly. There we go. All right, pretty nice levels. And you can kind of see how these things play out with price. Once you hit a low at a swing point, you see that as a low, bullish divergence. The yellow dots, that means potential reversal. Blue dots mean trend change. So now you've got 1, 2, 3, plus the whole thing is in the green. The retail stablecoin demand's green. So you're looking for potential reversals at the swing points for potential reversals back up. So it's a little bit more difficult to see higher, when you're not seeing it and in real time, rejecting off something. So something I like to use a lot is the core trend. And what I will do with that is I'll have this thing set to scalp. If you're on the 3 minute on automatic, anything under 1 hour, it'll automatically move it down to scalp. But I tend to just have it on scalp in general because I'm looking for that as my kind of key. I don't use entry exit levels because I want to be able to look at it and use my eyes to kind of see the reversals. And the important thing here is I'm looking at the bands. The bands, I have it set to the Trendmaster bands. This is essentially taking Bollinger, Donchan, and Keltner and arithmetically combining everything so you can see it, all three things at once. I'm seeing essentially between this, the oscillator, and the on-chain metric bundle, and the auto charting tools, I'm seeing like probably 15 or 16 different indicators in one on screen right now. So what I'm trying to do with this is have high probability reversals. So with high probability reversals, I want stuff that pokes into the bands and then starts closing back above. Same thing into the upside, same thing to the upside. Anytime you have these kind of failures that start going back and going lower, this is where we'll start talking about the swing stuff and the important structure that we're essentially, failing. So locally, what are we doing? Just looking at the local structure, nothing too interesting. We had a kind of expanding move of the bands. The bands are kind of contracting now. We still got the low put in here at 26,531. So that still looks like a pretty good level to long. We're holding underneath the daily open. These higher time frame levels, they're going to be important as far as holding because they do kind of confluence hold levels. However, Just watch out because we're getting into a low volume area. We're end of day Friday, not expecting a whole lot. There's no major news announcements happening, nothing crazy coming out, even on latest updates. Yeah, kind of nonsense. Is everybody thinking it's retracing to 20K? That's funny. So, local structure and going into the scalp move. Generally speaking, the same rules apply that we talked about from last week, right? If I'm planning a trade, I want to make sure that whatever I'm doing, I'm getting a 4-to-1 risk reward, right? So if I'm going to I'm going to long the bands until proven otherwise. I'm going to target essentially the next previous important level, which in this case would probably be the daily open. And I want to make sure I'm getting a 3-to-1 or 4-to-1, preferably a 4-to-1 risk reward. Now, that's only about a 43, or what is that in move? $23. It's a very small move, right? Just look at the size of it. Yeah, so you're talking a couple $100, or no, excuse me, not even. You're looking at $22 essentially, or 220 pips. I don't count on pips on crypto. Is that a whole lot you can do stuff with? Like realistically, no. That's a very low area because a lot of exchanges will wreck you out on spread. So if you're market smashing into position, you have to be able to make sure that whatever price you're getting, it'll allow you to take a position in the opposite direction. Now, most exchanges, especially Bybit and BitGet, the very high volume ones, they'll give you good spreads in crypto and Bitcoin. So with spreads, that's a lot more, especially low time frame. You're talking about stuff for indices and gold and commodities and stuff like that. So essentially what we're looking for right now, are we seeing a general potential reversal? Yeah, from the highs we put in back at, what was it, 2 hours ago or 3 hours ago? We had some nice reversals back to the downside, had some significant bounces, and I just broke it. One second. So what we're doing now essentially is we're potentially gaining back on the daily open. So looking at some of the swing structure that we've done before, and let me change this back. What's some important swings that we may look at? Well, this is where some big brain stuff comes into play. So we talked about the swings last week. What's some important swing level structure? Well, that's an important level, and obviously the daily open is an important level. Why? That's the low. This is the swing to the downside, right? Price is moving down. The direction of travel on price is to the downside. So how do we look at it? This is the low of the swing, and that's the high of the swing. And it might not make sense, right? Make sure you go back and watch the one we did from last Friday if you're confused on this. But what you're saying is price is moving down, low of the swing, high of the swing. I know that reversals from the low of the swing have higher probabilities to do a general reversal up, higher probability than going all the way to the high of the swing. Now, that's on the 4 hour. So I'll denote that to make sure. And this is where it gets kind of complicated, but it's an important thing to do if you're really trying to chart out what you're essentially scalping. Go down to the 1 hour. Does that still play out? Is that still some low swing structure? Yes. Is that some important stuff? Yeah, it's currently where we're failing, which is interesting. Anything to the downside that's super interesting? No, not specifically. You can make arguments about that level as being like the 1 hour low of the swing. For me, not so much. I'm not really too concerned with it. But that's very local. So we're on the 1 hour from the 4 hour. The 4 hour level still play out locally. Well, the 15 minute. Anything significantly interesting? There's a couple stuff here that we're actually seeing. If you see here the wicks, right? We have wicks here that are holding to the downside, right? They're holding structure to go back up. And here, conversely, we have a lot of wicks doing the opposite thing. They're failing to go back to the downside, right? So what does that tell you? Well, in this area, you're seeing essentially reversal, right? What as was support is currently looking at as resistance. So this to me would be an interesting level that I'm like overall in the structure that I'm interested in. So I'll just pop a level. I'll just pop one there, see what happens. So going down to the level I'm interested in, the 3 minute. Are we seeing some reversals off of the 4 hour to the upside? Yes. The downside, not so much, just because we're failing back to the downside. But now we've got some cool and interesting levels that are kind of interesting to help us with trading in this local area. And now there's some cool things we can do here with the local swings. This one isn't really playing out, 26,571. Not so much. It's not a little bit less relevant on the 3-minute. So what we'll do now is we'll look at some local structure. Here's some local structure, and the reason for that is because that's where we failed to go lower. Here's some local structure as well. Here's where we're seeing some failures to go lower. So essentially, we're seeing some resistance. We're seeing some failures to go lower into structure. Are we failing anything else? Is there anything else giving us an indication to potentially short these levels? Not really. And that's going into the high probability confluence part of this. If we're not seeing a lot of levels that are giving us good trades on the 3-minute on this, we can either look to trade other tickers, or for this, since we're testing stuff and we're doing essentially the show, like a demo of what's going on, I'll go to the 1-minute and just see if we got some more interesting information. So from here, anything really interesting? Well, we are gaining, right? From the low, we've made a higher high, higher than the previous high. And now we made a higher low. So now we've seen some lower time frame trend change. And these levels are actually reacting pretty nicely off of some of the bands. You're getting some high points here where we're seeing failures from a 4-hour level, failure of the band, failure to achieve that level. You're seeing trend reversals here, and essentially failures to go back to the downside. So you're seeing some stuff that's like even on the 1-minute that's pretty interesting as far as scalping. So what am I trying to do in this area? Well, we're looking at maximum extractable value. So if price goes back up into this area and starts failing the local structure, failing the bands, that's where I'm looking to add to a small short to come back lower. Same thing to the downside. If we get price moving back down into the bands, testing some structure, I'm looking for lower time frame reversals. Now, with the lower time frame reversals and with all of this stuff that we've been talking about, it can get really confusing, and I understand that. There's a lot of things that people are confused on, like why does that play out? Why does it do this and not that? Well, at the end of the day, let's see what we can see locally. We're failing a daily open. That's kind of like if we're looking at this little range structure, it's like the midpoint of the little range we're in. So what does that mean? Well, if we're trending to the upside, and we know we are low time frame since we're making higher highs and higher lows, right, from the significant stuff. Once we made that trend change, right, the first higher high and higher low, we're now constricting or contracting, right? So in the market here, what are we seeing? We're seeing that price is essentially making lower highs and lower lows, or lower highs and higher lows, coming to a point. We're also seeing that the bands are getting closer together, and we're looking for now change in the overall direction. So if you're looking to trade this range, it looks like it's getting close to coming to an end. Well, the nice thing that allows us to do that is to then say, okay, well, I'm looking to short these levels down. I'm looking to short these levels down back to center and long these levels up back to center until I'm proven otherwise. Is that pretty decent risk reward? That's so-so. Something like that. It's not good enough. Something like that. There you go. Roundabout. So that's my general kind of idea in this area, is I'm looking to essentially short this and long that until proven otherwise. What's the proven otherwise? If price does this. If price does this. Because what this does is if price breaks out of this little range that we're in, it now says, well, screw this range. We're done with it. We've made whatever move. If we break out to the upside, then that we know that this was accumulation. If we break to the downside and continue moving, we're still distributed because we're still moving to the downside generally. So if we're looking for the reversal points, what's the higher probability of reversal once we break out of this zone? Well, if we do that, if we break out to the upside and start gaining structure to go back up. If we don't do that, the priority remains the downside. So what you're still looking for, because we're moving down, even though we've made a higher high and a higher low, you're still prioritizing downside moves until you gain levels that you've lost, if that makes sense. So let me just pause real quick right there and look. And if you guys have any questions, go ahead and ask them, and we'll kind of dive a bit deeper into this kind of idea. Let me go back to the 3-minute and just see stuff. That's on the 1-minute, and I feel kind of dirty. No offense to the 1-minute scalpers. It is what it is. CBDC. Oh, thank you. Appreciate it. No questions. Again, if you have any questions, just feel free. Just unmute yourself and say, "Hey, I got a question." Just be polite, or type it in the chat. That'll work too. So, if this is the overall idea of what we're doing on the 1 minute, how about on the 3 minute? Well, this makes a bit more sense if we're looking at the 3 minute. We want to see levels that hold essentially the bands to the downside. It's still targeting the middle, the daily open if we go below it. The priority overall is still to the downside. The trend higher time frame is still to the downside. So that's still essentially, if you're looking for the longs, you're trading against the trend. The better weight if you're going to take a bigger trade, a bigger scalp, is if you do this move here, because that's the gain of the local level to take you back to the upside. Currently, there's no real trade. You're waiting for something to happen back to the downside. You can try scalping some of these lower time frame levels. I don't recommend it. You're looking for high probability reversals. And right now, do we see anything that's high probability reversal doing something like this? Probably not. But that's the general idea of what we're trying to do. We're looking for a risk reward that can give us a 4-1, 4-to-1 or higher from a point of potential reversal. So if I'm on the 3 minute here, I want to target back in the daily open and give myself a little wiggle room. So if it does end up moving against me and then failing back down, the idea is with these moves as well, with these kind of trade plans, what's the invalidation? Like price going above me doesn't tell me it's invalidated because it can still go like this, right? Fail back within. This is why you have a 4-to-1 risk reward ratio or higher, because a price stopping you out does not necessarily mean your trade is invalidated. But it's an important thing to understand with scalping is that your trade is only invalidated when the price gains or loses the level that you wanted to enter in the opposite direction. So if we do this, priority has changed. And then the shorts are no longer valid until we lose the level again. Same thing to the downside. If we go down and start failing to go lower, it's not valid until we regain the level that we lost. So make sure that you understand that when you're planning your trades with your stop loss, your entries, that you getting stopped out should never be the end of the world. It should never be your liquidation point. And it doesn't mean your trade's invalidated until you have your right validation criteria. Invalidation criteria for a short in this zone is gaining the level that we want to short to the downside. That would constitute essentially an SR flip, right? This is resistance. This is support until proven otherwise, right? Overall trend is to the downside. I know it is. So I only care about reversals if we gain and flip that resistance into support. If we flip this, let me try this instead. I just realized I have a line. There you go. If this support becomes resistance, until then, play it as such. You know that support. You have proof that it's support. You have proof that that's resistance. Treat them as such until proven otherwise on the local level. That's scalping kind of in a nutshell of like what you're looking at as far as the structure. The best thing I can actually say with some of these levels is if you're looking for some potential like scalps in some of these trades, like low time frame, the best thing that I really like overall is looking for bearish divergences at high points or bullish divergences at low points. Just because you bolded doesn't mean that's the low, but it does mean, hey, stuff's happening. We're probably looking at a little bit of a reversal. And they tend to play out, especially higher time frame. So here, we have a potential level. Let's see if we get back up into something like maybe a bit higher. If we get the gain to go higher, we have a high probability move to the upside. Where should we go if we gain that? Well, we're probably looking to test something important. So probably something like this, potentially something like this. If we have the gain of the level, there we go. We're popping above. If we start closing back below, you're looking for that reversal back to the downside. Sound good? So I'm going to go through some alts real quick and then see if we can come back. Okay, nice. All right, we went to some level, went to some structure. Let's see if we get the gain back to go higher. We're seeing some priority shift. And the closes of these candles are pretty significant, just FYI. Okay. Okay, bang at the level. What's up? What's up, Lord Drake? I got him.
Bad.
What's wrong? Your Lord Drake, your mic's on.
Oh, oops. Sorry.
Right. No worries. It's all good. Okay. So we had a failure back to go lower. Price coming back down. You look for the short back to the downside. We're back at the highs. We've broken out and made new highs. It's still potentially deviation. If we have the gain to go higher, that's one thing. Then we're looking for a potential change overall. Just checking. Let me hide this stuff real quick. I'll put that as. Okay. Anything significant changing on the 15-minute? Yes, we're seeing some potential trend change. We're back above the daily open. If we start gaining back above levels, we could potentially be looking at a shift overall higher time frame, which changes our DA lower time frame. So if we get the gain to go higher, what do we look at then? That's what you're looking for, essentially, if you get the gain. Because it breaks out of the range that we're in. We're seeing trend change on a higher time frame to potentially go higher. And that's a significant gain to go back to the upside potential. So the shorts are still valid. Why? We broke out. Did we close above? No, we closed below. For gain or loss, when price goes above a level, it does not mean that we have gained the level. When price goes below a level, we have not lost the level. When price goes above, closes, and then bullishly back test the level and then closes above it, then we are seeing a shift of supply and demand. We can still be seeing that. There's still good buying power right now. We're not reversing quite yet. So there's still potential for that reversal. So all you're doing is that if you're giving yourself this leeway, the trick is in scalping the high risk reward ratios. Because what that means is you don't have to, if you have a 4-to-1 risk reward, you don't have to win half of your trades. That's the important thing to take away, is that you can lose most of your trades and still be profitable, but only if you're doing things intelligently, which is 4-to-1 risk reward ratio to a local profit target and being really, really conservative with your potential gains. That's the big thing overall. So we'll see what happens as it's coming back down. I'm going to look at a couple different alts real quick to see if we got anything more interesting. I have a purple list, I think. I do have a purple list. Good. Okay, here's an interesting one. It's going off on the first one I saw in Big Cat. Bearish divergence, top of the point. Bang, bang, bang. Lots of things saying overbought in the local time frame. Bearish divergence to go lower. That's all fine and dandy. Still valid to short from the high to go lower until we have a gain higher time frame. Local structure on this has been pretty significant. If you're trading alts and you see something that's the oscillator moving very differently from the retail stablecoin demand. The thing that you want to do is essentially make sure you're keeping an eye on it, because when they do align, you get really good moves, right? Really good moves that bring you back, even if you were to take the gain to go higher. I mean, these are significant to do in a 4-hour period, even on the 15-minute. So 3-minute time frame, yep, still valid, still important. Bullish divergence, middling retail stablecoin demand, regain of level to go higher, still targeting back to the next level above. And then once you get the reversal, that's essentially the end of it. When you're planning your trades as well, when I do the 4-to-1 risk reward, I usually do that even on high time frames, just to my first profit target, because that keeps me honest to the point where if I hit my first profit target, what can I do? Right? Let's say I took this short. Who knows? Who knows it'll play out? It's very, very low liquidity. There's very little trades going on. We know that because some of the candles in the 3-minute time space are dead, essentially. So if it does reverse on me, it's not the end of the world. But if it doesn't, if it actually gains to go higher, where's the first target? Well, we're targeting the high structure, right? Something like that. If you can get a 4-to-1 risk reward that's realistic, that you can take trades that are high probability. That's the important thing. But when I take these things to the first profit target, even on a scalp, I want to make sure I'm maximizing my trade. So I might exit the trade entirely, which is still valid, right? Because you've planned it, and if you're scalping in and out, just be consistent. But say you're scalping, you want to take 30 or 40%. Well, what you can do on a 4-to-1 risk reward, if you take your first profit target, just move your stop loss into profit. Because that, like I talked about last Friday, if you move your stop loss into profit, your risk for your trade is zero. You have no capital risk. You've only made money. And if it's in profit, you can only make money on that trade. Even if it stops you out and you didn't close anything, guess what? You're still making money. And that's essentially on the goal for scalping. Just like normal trading, on swing trading, we do a higher time frame. You want to make sure that your risk is reduced as quickly as possible, because if you're not reducing your risk, you're not trading. You're gambling, and that's a hard mentality to break out of. So some of these things as well, like if I'm just looking at my list here, you got stuff that's like incredibly high volatility comparatively. Like this thing on a very low time frame is swinging 3% down in 18 minutes. With stuff like this, that's so incredibly high volatility that your leverage needs to compensate for that. So regarding leverage on low time frames, yes, you might need to crank up the leverage to make sure that you're able to make profit on the trade, to make the juice worth the squeeze, so to speak. But if something's doing 4% moves in 18 minutes, think about that in relation to Bitcoin. Bitcoin maybe makes a 4% move in an hour or two, unless it's like really pumping or dumping, right? And if I'm comfortable taking a 10x on pretty much any time frame on Bitcoin, what does that say about an altcoin that's doing that in 18 minutes? Well, you might want to reduce your leverage to less than that. There's nothing wrong with going lower in leverage, going lower in exposure to overall capital, because at the end of the day, it's capital protection, which is the important thing. You're not gambling, you're trading. And if you're not protecting your capital, you're essentially just either martingaling or gambling. And martingaling, if you ever heard about that term, it's a lot of, I even met really good traders who use it. Essentially, it will statistically fail and you will lose all of your money eventually. It's just a matter of time. So, local structure, what I'm looking at, if you're looking at also potentially scalp, you want some things that do some percentage moves on the day, but nothing too crazy. There are some, like even here, you'll find stuff like seller, super, super low volume. Anything really sticking out? Well, kind of. There's some nice block structure to it, but again, some of these moves are just, are they worth the squeeze? 0.65%. Yeah, you can definitely make money on those trades. With Bitcoin, I want to see moves that swing up and down that they're doing about 0.65 or so. So from a high point to like the next low point, 0.65, 0.77. And this also plays into liquidations, which is something I didn't even cover on the Bitcoin side. And the reason for that is because with the liquidations, when we calculate liquidations, a lot of guys on low time frames will actually be trading super high leverage. So super high leverage, essentially like 100x with, whatever, $1,000, 10, whatever the highest you can actually get out of the exchange. Liquidation points essentially, where if we're swinging from this to this, are people getting liquidated? No. But if we're swinging from, say, this to this, no, people still aren't getting liquidated. Where are they getting liquidated? When we reverse, they're getting reversed in a 2-hour period. We went to 0.65. How do we know that's a reversal point? Because we know liquidation levels. On scalping, there's two things you need to think about with liquidation levels. If you're doing 100x, the average exchange, it's a little bit different per, but we're looking average. 0.65%. Oh, that's a really shitty 6. Hold on one second. 0.6. There you go. That's better. Nice 6 have overdrawn. At 0.65%, price moving against you is approximately where you will be liquidated, or where other traders will be liquidated. And that doubles at 50x to about 1.3 to 1.4. It's just dependent on the exchange. It's a little bit different based on it, but overall, that's where those things are getting liquidated at. And this is now building into the mentality of, okay, we now understand liquidation levels. We've done the 65% down move, right? 65%, 0.65% down. 100x's that were longing in the upside move to break out are now liquidated. Where's the next target for liquidations? Are we there yet? No. We want to swing back to the upside if we want to take those liquidations out. So we're breaking out. We're making new highs. Let's see if we create some structure above. If we're able to create structure above, the ladder plays out because we're gaining now levels to go back to the upside. If we now lose the level, again, we're looking to take these trades against it until essentially it's gained. And that's how we look at that in probability, which is 4-1 risk reward. It's still valid on any time frame as far as high risk or for mitigating your risk as far as taking as many trades as possible, while also at the same time not risking too much essentially. So 4-1 risk reward, that's the rule. I don't even like. I've had a lot of people debate me on that 3-1, 4-1. Yeah, it's still valid. Price is reversing. We're seeing some breakout structure. We're seeing some movements back to the upside, significantly changing over the previous stuff as well. We're having movements higher to potentially gain, which is cool. We're seeing some band structure test here. We'll see if that is now, since we're on the 3-minute, is going to be the level that we start reducing at and failing at or not. So overall with the settings, I think they play out pretty nicely. If you want to use the swing stuff, yeah, you can use higher time frame swings. I think they're still a very valid point in price action trading. If you're looking at lower time frame stuff, I would probably recommend sticking to keep things simple, sticking with the band stuff. So you're at the bands, target stuff back to the downside. If you get failures, back below. If you don't, you don't. Right? Where do I want to see tested? I want to see the structure we just gained tested. It's still breaking out, so there's no potential reversal yet. If we start failing to go lower, we want to see those failures essentially show that we're changing. But what did we observe on the 15-minute as well? Right? 15 minutes showed us a trend reversal, and that's going to affect how we look at scalping lower time frame as well. So, any questions? Anything that you guys are looking at particularly?
I have a question.
Yeah, go for it.
I put it on the message board.
On the message board? Absolutely. What is your preferable time frame for trade bands in this moment? You mean backtest liquidation maps? Why the bands feature changes versus the horizontal? The bands feature versus the horizontal level liquidation line seems to static from the band start. Just TP on my long. Okay. So you're looking at liquid. Let me. So bands on liquidations. So my favorite thing to use on liquidations for bands is on the 4 hour. You can use it on lower time frames. The problem is that you'll see a lot of times that it'll just show you the daily bands, and that's what it does. It updates from essentially the daily time frame based off the price action and local liquidations. So if we're using this low time frame, it's essentially showing you where the current structure is on the day. Right? That's kind of like the center line of the liquidation levels for the day. And what you're seeing above you is 100x getting liquidated, 100x is below, not getting liquidated on the current structure. I don't recommend people using this on the 3 minute. You can try to use it as confluence points as far as like, reversals. I don't see that as being a high probability. Generally, I look at the liquidation bands and something like the 4 hour because it tells me almost always like what's happening in the market. Okay, I know that when last time we hit the 20x short liquidations, we started reversing. We did the same thing here. We then had failures back under the June. We're now under the local level of liquidations. Let's see if we gain it back to go higher. So what are we doing in the current structure? Essentially, from the major down move that wrecked out all the liquidations, took out the 20x shorts, came back, wrecked out the 20x longs, went back down, tested the center line, went deeper, tested it, regained back to the upside. Now we've grabbed the 20x short liquidations. Now we're reversing back to center. That's the way I look at it, like higher time frame. So I'm looking at points of reversal when we hit significant bands, especially when we break into the 20x and 10x bands. And I know looking at previous structure, a lot of times, when we have more
Yes.
static sideways, we have a lot of this 20x testing.
Hi, Mr.
Yeah.
In terms of importance, is the same if liquidate to 100x than 5x, or 100x is a more important level?
Okay, so to answer your question with the liquidations, if you're looking for more local reversals, like lower time frame reversals, you want to see the 100x and the 50x being taken, because those things are taken out every day of the week, and they're taken out several times every day of the week. So when you see them, we pop into liquidity, right? Pop into liquidity, fail. Pop down, liquidity, fail. A lot of times when you have deeper drives into lower liquidity, and then we have reversals, you have a higher chance of going right back to the upside. So essentially, when you have big liquidation events, then you have to think of it this way. If the liquidity, as an example, that was taken from the 17th of August, we had this massive drive down from starting at the 16th all the way down to the 17th, and we wrecked out all of long liquidations going down to like the 5x's and stuff like that. Where's the long liquidity that's left? There's not. All of the long liquidity from people who were 5x longing at 29.5, 30K, it's gone. So what does that tell you? Well, if the major liquidity to the downside is taken, the long liquidity is majority taken, where's the liquidity now? To the upside. There's more liquidity now above us with people shorting than there is to the downside. Now, we've had a month since that happened, approximately, or a little bit more than. And in that time, we've built up more liquidity below us. So we've got some levels that are pretty interesting, essentially. If you're looking at liquidations as well, it's always best to use it on a futures exchange, because they'll definitely wick deeper wicks. So when you're looking at liquidity, where's the local liquidity? Well, you've got some very high leverage stuff, high leverage longs, the guys who got long from the weekend over in the Monday, right? That's right below us. What about to the upside? Is there a lot of liquidity right above us? No, there's a little bit. There's a couple intraday stuff, but there's a lot of higher leverage liquidity from that day, from these days, essentially, below us. So you got 100x's there, you got 50x's there, and then you got deeper pockets of, way below us. Now, with that, my argument would be, where if I was trying to extract maximum value from the market and I'm a market maker, where do I want to do? What do I want to do, essentially? Well, if I go down here, I use these liquidations, because what happens in liquidations? let's say in this zone right here, there's 10 million in long liquidations, right? Well, they're already long, so they're already in a position. So there's no effect on the market currently because it's already happened. But if they get stopped out and liquidated, what's the market effect? If you're long 10 million, right, 10 million contracts, how do you exit 10 million long? Well, you have to short 10 million. So what happens when you hit these liquidity zones and people are exited out of liquidity, price gets forced even lower. And the reason for that is because that's the market effect. The market has to exit positions, which will affect essentially pouring fuel on the fire of a downside move, or conversely to the upside move, right? When we start hitting pockets of liquidity, those people getting stopped out forces them, because they're in shorts, to buy, which forces price higher. And once you do this long enough and you build liquidity long enough, you'll get these crazy, crazy levels of liquidity, which is like what we had in this area, right? From mid-June through mid-August, so 2 months, we built up long liquidity below us. All of this liquidity, right? And to show it more easily, I'll just put the bands on. Right? All of this liquidity, this lower leverage liquidity, got to be built and exist until finally it started getting taken out. And the market effect was there weren't people buying it back. There was no essentially buying it back. So what happens is you get cascading liquidations where major liquidation levels push into the next major liquidation levels, which push into the next one and the next one, until all of a sudden you're dumping and doing a friggin' like 5K candle. So it takes time to build that liquidity in the market. So I guess I long ways around answered your question, which is if you're trading low time frames like intraday, you want to target the 100x and the 50x liquidation levels. And when those levels get tagged, you then want to look at potential reversals on lower time frames. If you're looking at higher time frame market moves and you see, those big cascading liquidations, you're like we have back here, essentially, what does that tell you? It means all of the longs are freaking wrecked. They're out. They're done. So where's the liquidity? It's above you. And that's how the market will generally move. It'll move from liquidity to liquidity to liquidity. Yes, there's price action involved. Yes, there's all these other things involved. But at the end of the day, I care about where the liquidity is because that'll tell me mostly where the direction of travel for price should go. So locally, we've got stuff below us, interesting things that potentially give us some potential hits on levels and structure. Currently, we're holding the weekly open. It's Friday. We're going into the weekend. Weekend scalping is rough and not fun for a lot of people, which I totally understand. Turn it off. Turn those back on. Okay. We're seeing some changes. We hit the bands. The bands got moved up, but we're back underneath. Let's see if we get some failures back under the level. We're getting very, very overbought. We've got very low retail stablecoin demand. If we start to see failures, we can look to potentially short the failure back below, back to the downside, to at least test something like that, right? Which was the previous level. So currently we're gaining to go higher. If we do see a failure, I'd want to see this essentially. I want to see the failure under that level, take us back to test this level. And if you do that, the 3-to-1 risk reward, cool. But as far as scalping goes, yeah, I probably shouldn't have gone into the whole 4-hour swing stuff. It's still valid. I mean, there's a lot of structure and levels with 4 hours. But over the 3-minute, yeah, you want to see that failure to go lower, back down to test structure. We've had a nice move back to the upside from the lows. Did we actually get the liquidation? Not quite. Probably some people got stopped out, but if you start seeing a reversal, you'd want to see something like this. Hitting bands, starting to reverse, going back to the downside. If price gets bought back above the level, there's a potential for a reversal. It's just getting there. So you're seeing it right here, essentially, where we're now starting to reverse a bit. Just look at the 1 minute. Anything interesting? Yep. Trend reversal, overbought, local failure. So the whole idea with the scalping stuff is, can I make a good potential position just based off of that? I don't want the price to go higher than this. I want to target that. Is that good enough? It's a little wishy-washy. If I tighten it up a little bit, yeah, something like that. But still valid because we're failing now potentially. So what you want to see here is that price. Yeah, price will probably go here if it bounces back, and then the failure back to go lower. And if it does gain it, that's all there is to it. You just flip your bias. The hardest thing about scalping, if I'm going to be honest, is not caring about the direction it goes, because a lot of people get really frustrated and they're like, no, it's supposed to go that way. It's like, think of the market as this way. Like, everyone thinks of it going up or down, or bullish or bearish. I really hate those terms. The idea of bullish, or if I'm bullish or bearish, I literally think that's a psyop by like large institutions to get people to get emotionally attached to price moving in one direction or the other. So what I would say is, think of the market as in, you're going this way, you're driving a car or whatever, that direction, and you're either swinging to the right and you're swinging to the left. Oh, we're hitting some resistance, we're hitting some levels we want to fail at. Okay, let's swing back to the right. That's kind of like the way I look at it. And if we don't do it, if we actually gain the level to go back to the upside, we're just continuing that priority change. But 3 minutes been pretty low volume. It looks like that's the level. If we're going to have a continuation failure, we want to see it there. If we have the gain back to go higher, that's essentially the invalidation point. And a lot of times you'll see weird stuff like that. It's like, why did it go straight to the level? It's like, well, that's essentially the priority where you want to see change of structure. The gain back of that level is the potential to go higher, right? Let's check the chat. So there's no role in terms of liquidity amount. It's relevant to no true cascade liquidation. Yeah. So that's essentially what the liquidations is. It's you're looking at in the sense of the liquidity. The higher leverage liquidity is good for lower time frame reversals. Lower leverage liquidity shows major market changes. If that makes sense. So any questions there? Anything? I know it's a lot of stuff, and with the whole scalping thing, a lot of people, it hurts their brains. It hurt my brain for a long time. And like I said, with scalping, guys, I don't recommend people doing it to start. It's people look at it as a way of easy money and free money. Oh, I'm just going to scalp everything, and I'll just make free money and easy money on everything. Which it's never the case. You'll get stopped out a lot of times. Most times you'll get stopped out more often than you think you're actually going to make money on. And when it finally reverses, a lot of people will miss it. And if you do stick to a good risk reward level and being really consistent with your trades, like, you can still make it work, and you can make it work with not winning the majority of your trades. And that's the important thing, is that you're looking at overall profit factor versus drawdown. Like, don't if you're scalping, don't think about it as far as win rate. Your win rate has nothing to do with making money. It never has, and it never will be. You can win 90% of your trades, but the people who win 90% of the trades and they don't have a good risk reward, they don't understand drawdown, very often they'll give it back to the market, essentially. And that's the entire point. So trade on the 1 hour, trade on the 4 hour, become an assassin there. And then once you get really good at it, look at the lower time frames. Because stuff happens way too quick for most people's liking. For my liking as well. It just especially in low liquidity areas. Like we're into the day on Friday, you'll get rogue wicks, especially on exchanges. You'll get stuff moving very, very strong against levels for oftentimes no reason, other than people can see low liquidity as a way to manipulate the market. Also, fun fact, if you start finding yourself getting stopped out a lot and then price reversing, do a test where you start actually moving, plan your trade normally, and then move your entry to where your stop loss would be. Just a suggestion, and see if that works for you as far as like a better potential level. It's just something you can use in your arsenal as far as potentially changing the way you look at it. Because if you get stopped out a lot of times you'll end up being your stop loss or someone else's liquidity. Yeah, like they're using that liquidity to essentially enter a position. But overall, in the current market, like what we're seeing here, especially since we look higher time frame, would it have been better to trading the 15-minute, trading the trends? Yeah, absolutely. And that's the whole point that I want to get across is don't get focused on the low time frames. The low time frames are fun, but they're not everything. The high time frames matter. So a little bit more. Yeah, it is being recorded. S&P will collapse. NLP. Yeah. Do you trade with Wyckoff? Or are you accumulation distribution? Not specifically, Soho, just because my biggest issue that I have with accumulation distribution is that the market is constantly doing that on low time frames as well. So when you're looking at the higher time frames, I care about higher time frame accumulation distribution. But as far as the actual Wyckoff patterns, like accumulation pattern 1 or distribution pattern 2, not specifically. I look for the major moves that kind of dictate that. So, essentially a major low lost and then regained. A perfect example, higher time frame, is like what we saw on the dollar currency index. I just turn this stuff off real quick. Like that's essentially what if this breaks that high, you're in a Wyckoff accumulation. Why? You had several drives down, you had the first move up, you had to collapse back to the downside. The spring, that's the big one that everyone worries about, the spring that regains very, very strong levels. Regain to go higher. If we break the high, essentially what you're looking at here is if you have accumulation that fails to break below levels, if it fails to do this, like you're probably going to do something like that and then go there. And if it does that, the market's wrecked, probably. Yep, but overall, that's essentially what you're looking at with the scalping stuff. You have priority changes back to the upside. You're still essentially at the levels that you're looking at for if you're going to start seeing reversals. But do we see them yet? No. The trade's probably got stopped out once. It's not valid to enter again until we fail it back below. We're still priority change to the upside. If we make new highs here, we could be potentially deviating, but these of them fail below. So, and like I said, this is not the optimum time to be trading on scalping because we are end of day on Friday, and I don't recommend it with the lower volume. You're much better off if you're going to trade scalping over the weekend, if you even call it that, is the 15-minute, by and large. Because you'll have larger movements, the things that'll move 0.65%. Because that's generally what we're going to do, go sideways potentially over the weekends. The last few weekends for the last few months have not been big movements. We haven't had CME gaps being created. Speaking of, do we have a new CME report? No, not yet. Hopefully we get that out soon. We just got to tap 2 accumulation on S&P 500. Potentially. The problem I have is that in general thought, if you look at the actual like theory behind it, you can't really have accumulation going at the upside of a move. You're looking at distribution, because if you invert the chart, like it looks more distributive than it does accumulative, or it looks like an accumulation pattern if you reverse it. The only way to kind of like invalidate that is to, like I talked about at the beginning, is to gain back the levels that you've lost that led to the low here. So the buyback here is strong. If this is the reversal, it's doing that. Do you consider high? Sorry, I missed that one, Pete. Do you consider patterns on high time frame before entering scalp trades, or rely on the indicators? Both. So at the end of the day, if I'm looking at kind of like middling structure overall, I still want to rely on the indicators, because that's essentially what's telling me if something is a high hit rate or not. You know, if the high time frame is still to the downside, have we lost levels from the higher time frame? Yes, we've lost essentially structure and levels. You've lost the high range, if you want to call it that, to go lower. So you're technically higher time frame trending a little bit to the downside. And stuff on the 1 hour and the 4 hours essentially middling. So no major reversals that have happened until you talk about like earlier. If you're trying to scalp like low time frame, when you see big moves like this, or big levels that then we start failing, you can do that absolutely very effectively. But you need to look at it from a perspective of like, what's the higher probability of all the moves, essentially, which is if you're trending one way or the other higher time frame. Like look at the market this way. The market's always doing this. It's swinging up and down, right? So if that's kind of like ranging structure, you can trade it pretty effectively. Just think of it lower time frame. But if the market's doing this higher time frame, like why would I want to essentially look to long these but not take these? And this is the high time frame trend, like why it's important to understand the direction of movement and understand the high time frame trend. Because if you're trading against the trend higher time frame, you're not maximizing your gains. And if you have a problem doing it, it's probably because you still have that mindset, like a lot of people have, where it's like, oh, I want to catch the bottom. I want to long the bottom. I want to short the top. When instead of like, okay, let's say we've got some range structure up here. We've broken it. We failed it. Okay, entering the short. Okay, priority is still down, up, shorting, that type of stuff. Instead of, okay, well, we broke down, but I'll just still long it because I want it to go back up. And this is the psychology. This is more of a psychology factor of the market movement, which is price makes new lows, and people want to essentially gain. Price makes new lows. I want to buy the long because it's going to gain it back to go higher, right? That's not the case, and that's how you have to break essentially that mindset of bullish bearish, because a lot of guys will get themselves like tied mentally into those things of, okay, I'm going to keep trying to long it because the market's going down, so I'll be able to maximize my gain once it reverses. Now that's the market psychology that they print patterns out, like really nice patterns that say, oh, well, we're doing this, we're doing a head and shoulders, we're doing an Adam and Eve, we're doing a Batman, like all these things that don't mean anything generally, just because they know that they'll be able to trick enough people to keep longing or keep shorting. And that's why Max always talks about long short ratio and stuff like that. If everyone's going long, but I don't understand, the price keeps going down, but everyone's going long. Well, it's because the majority have to lose. The majority is always wrong. If everyone on crypto Twitter is putting laser eyes on their avatars and calling for 100K, like I'm telling you right now, it's not going to happen. Like that's the whole point, is that everyone has to be looking one way for the price to start moving the other direction. And the only way to tell that price is changing is if you're actually looking at price and you're saying, okay, we're actually gaining stuff to go lower, or I don't know, like we're actually failing to come back down to test stuff, that type of stuff. That's the important thing in my head as far as that goes, which is, I assume that the majority is always wrong, and I assume that the majority are going to keep doing the same thing until they're broken psychologically. And once they're psychologically broken, then you look for reversals. How do you know it's broken? You don't know when the general market's breaking. But you do know is that if price is going down, 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 and people aren't longing as much, and all of a sudden we have a gain of level, well, now you're looking at a potential market reversal. It's hard to do something with $20, but finally broke back down after stopping it out. So that's usually what happens. And this is why we rely on indicators to help us out, right? Reversal point potential, trend change happened here, and lower. So anything else? Anything else you guys want to look at? Are you done with the daily streams on YouTube, Slick? I think we're gonna bring them back. I think we're gonna bring them back because I kind of miss them. They were good for me too because it got me into like the mindset of I would trade a little bit beforehand and then have a really good feel in the markets before we'd have the streams, because we would stream on like the open of the New York Bell, and then do that, and then I have a couple more hours like trade after because it's high volume time frame. London's open, or London's in the process of closing and the New York's open. So yeah, I think we're gonna bring it back. Maybe not every day, but I miss it, so I'm gonna start posting market updates again and doing all that stuff. No, it's not like everything's gonna be in the server. The TM server is gonna sit there until we repurpose that into some other stuff that we're building. Everything's gonna be in. This is the idea that the MDX Trendmaster partnership lasts forever. So we're gonna keep building stuff, and now we got some cool ideas to flesh out some new indicators, like combining all this cool stuff we have and like building like the ultimate scalp indicator, or like the ultimate like swing allocation, maybe like a DCA thing as well, for kind of build things for different time frame users. That's the important thing. And yeah, thanks Adrian. That's where they're gonna be posted at. There you go. It took us 2 tries to get it, but we finally got the failure at the high. Reversal, come back to the downside. And you can always tweak this thing a little bit to make it more effective for you. You know, if you want to increase the band sensitivity, or decrease it. Definitely a good thing to play around with if you're looking for a little bit more tight structure. There you go. Band 3 on the 3 minute. It's actually pretty sweet. Plays out very nicely. Oh, and something I forgot to mention. Point of control. It only goes back a very short distance because we're looking at the 3 minute, right? That point of control is still going to be very important. High volume area is very important. And very oftentimes you'll see it's like, I can't believe it's just doing it right there to the dot until it finally loses it. So anything, any last minute questions? Let me just check the chat, and feel free, open mic. Bit of a longer one, so again, scalping's not an easy thing. If you still want to kind of, let me see if I can, I'll just remove these. Just to kind of reiterate trading rule stuff. I can find it. Some basic stuff. I apply it to everything. Trading, scalping, swing trading, all of it. And with, as far as like using the oscillators, the core trends, all these different things from different height chains, make sure you have a checklist. A very simple way to do this is to just print out a piece of paper, and then, or like what I used to do was just have post-it notes around my screen until I ingrained it in my brain, right? To make sure I have a checklist. Now my checklist is all in my head, and I can do it as quickly as I possibly can. But that's, the rules are the rules that I follow, and if you have rules that work better for you, then stick to them. Don't get greedy and be like, oh well, I can make more profit if I do this, or I can blah 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 blah. Do some tests. Like if you have a good system, and if you can build that up over time, absolutely. Make adjustments, but you need a baseline. Like trade with some rules and trade with a good way for a month with some basic things that work out for you, things that work out, essentially, so you have some type of data. And then keep a journal too. Like that's a weird one, but talk, like write your journal about your trades. Think about your mentality. How are you feeling about your positions? Are you frustrated? Oh, I was taking this trade and I was really concerned because I was I was very, I felt sweaty because it was going against me, and I felt over committed to the trade. That type of stuff. It's a good way to collect your thoughts, and especially for guys who have gotten burned from the bull market or have lost a lot of money. I'd highly recommend it, just because it's a great way to break yourself out of bad trading habits. And another thing that really helps people as well, um, especially for the guys more specifically who have lost money in markets, is making sure that you trade with a good system like this, like use some rules, write out your confluence checklist, but trade with the lowest amount of exposure. Like don't go with the mentality of trying to win your money back, because the money's gone. It'll never come back to you. It is completely and utterly gone from the market. understand that, accept that, and move on. So with that, the idea is that start trading again, but trade with the lowest amount of exposure, like $1 or like 1%, like the lowest amount you could possibly expose in your total capital, because then you'll program your brain, if you're starting to make profit, is that you don't care about it. And if you're starting to lose trades and you're losing such small amounts, you won't care about it because it's very small amounts. And that's a good way to start breaking yourself out of it, because it removes emotion from it. And then if you stick to good trading rules, your confluence checklist, things that really work for you, then you essentially, you'll start making money, like you'll start being profitable, right? But it's so low amounts of money that now you changed the way your brain thinks about trading, and you're not afraid of it anymore. And that's a hard thing to essentially like come full circle when you've lost money in markets. Because a lot of good traders I knew some really great ones in the last bull market. I know several guys who lost big because they didn't want to sell shit. They didn't want to sell at 60K. They were like, nope, so and so BitBoy says it's going 100K. Yep, like that type of shit. Like, it's your money, you're responsible for it. So take profit aggressively and often. Like, don't leave money on the table. Walk out of there with your middle finger up and laugh at all the plebs that are essentially trying to jump in late to the game. But we got some fun stuff coming, both on our end with the indicators, and then I think the markets will start getting interesting again probably next year. So right now the game plan stays the same generally. It's accumulate, get your money on the table, because bull run comes along, then the hard work comes, because then you got to read white papers and study people's backgrounds and who's in what project and what are their goals, who's their backers, where's the funding, and then you can maximize what tokens you're essentially sharing, or like you're allocating yourself into to maximize your profit. There's a lot of cool stuff with that. But yeah, sorry for droning on a little bit there. Hope you guys got something good out of it, and I'm still waiting to see if they're going to post a CME report or not. No, I might have to wait till tomorrow. I don't see it. So that's about it. I'll leave it